Hello traders, good day to everyone. Welcome to our new webinar. It's Monday, June 17th, so hope everyone is doing well. Can you see my charts? Can you hear my voice? Is everything fine? Please let me know in our chat box. So you're either watching this on Twitter, YouTube, or even Facebook. So seems like everything is fine. Hey team, hey Enes, how are you guys? So not sure how many of you are watching football. As you know, Euro 2024 has started, so most of the time I was watching football or soccer if you are coming from the US. Not sure what are your favorite teams, who think you will win the cup. So if you have any suggestions who will win this Euro 2024, please let me know in the chat box. I'm really curious to see what will be your predictions. By the way, I'm also leaving on Wednesday for match between Slovenia and Serbia, so I will be away from Wednesday, and hopefully we'll have some good time. So if you will want to let me know who will win the championship, I'm really curious to know. Okay, so regarding markets, as you know, we have seen some very interesting reversals. We have seen last week, we have seen US dollar that rally quite significantly. You can see that I'm watching this correlated chart. So we have seen US dollar recovering because Powell somehow noted that just 1 month of good data is not enough to cut rates. So US dollar maybe on the top of this rallied, but US yields are still very weak, and I think that this downtrend on US yields will resume. Of course, we can see some pullbacks in the meantime. There can be a very slow summer, but overall I still think that later this year we will see even lower yields. Maybe Fed is going to wait a few more months for potential cuts, because if they would cut now, well, maybe they would be too fast and inflation could once again came very hot in a few months, and maybe this would be during the elections time, and then they would have to hike if the inflation would be higher. But of course they don't want to hike or risk this situation during the elections period. So I'm sure that they want more stable markets during election period, so maybe they will wait on these potential cuts till that time, and they will obviously have a lot of more information if this inflation is really cooling down or no. But this gap that we are seeing right now, sooner or later one market will catch the other one. We are still in risk on mode here, and if stocks will continue to do well this week, then of course dollar could very easily come back to the downside. Also, if you will here look at the dollar itself, we're still in the middle of the range, but if you just maybe try to focus on the short-term swings, because I really don't believe that we will see any kind of a real breakouts of these ranges here ahead of summer or during summer. So I think that we could be just chopping around, and if that's really going to be the case, then maybe we are going to see limited upside now at the upper side of this range that we are tracking. So actually we can even count 3 waves up from that June low. So we are at very important resistance for this week for dollar index. Of course, we can even rally towards 78.6%, but higher we go, I just think that there will be more risk that market will turn around, because keep in mind that we are still in very sideways price move here from the last year or so. Okay, so it's not really breaking out yet. There are different scenarios very possible here on dollar index. Can be a bullish triangle, as we can see here at the bottom, and even bullish triangle suggests that there will be some limited upside for current potential wave D rally. Okay, it could be very bullish if we break above 106.50. So that's still not happening. That's why I'm thinking that maybe even if it's bullish triangle, still there will be more sideways price action, maybe even through summer. But our primary wave count suggests that we are in a bearish triangle here. But that's still just a pure speculation because none of the wave counts shows completed correction. Okay, so you have to keep in mind that there can be more sideways before market may eventually break out of this range. But I think that very next big move is still going to be to the downside on dollar index, because I think on the dollar in general, because I think that US notes futures are headed to the upside. Of course, again, there can be some pullbacks in the near future, in the next few months, especially because we can be headed maybe into thin trading conditions for summer. There will be flows that will change this direction. Keep in mind that also stocks been doing very well over the last few weeks. There could be some portfolio adjustments. Some will book profits after this very nice run, especially if they want to have more maybe clearer situation, or wait on till elections, or maybe just wait another dip whenever they see a new pullback, because we have seen a pretty nice move to the upside on stocks. So some setback is definitely something that could also happen, and if that would be the case, some profit taking on stocks could obviously impact the dollar and other markets as well. But overall, the 10-year US notes, in my opinion, are still headed to the upside. We are missing this very big wave C higher here. Also, if you look at the TLT here, okay, which tracks the 20-year, you can see that we have a very nice and quite decisive break out of this downward channel, and we've been tracking this one over the last few weeks, if not months, and so far obviously there is plenty of room for recovery. But of course, again, there can be some setbacks on the way up. It doesn't mean that market must move in one straight line here, but overall direction is very clear for us here. Okay, also, if you will take a look maybe on euro dollar itself, obviously we are in a sideways consolidation here. It can be, again, same like with the dollar, obviously, because dollar index, as you know, it's calculated the most from the euro. So again, it can be bullish triangle or can be even a bearish triangle, but still you are approaching some supports down here at this trend line. So that three-wave rise that we were tracking on dollar index at the current levels, this equals to support on euro around 106.50. So that's a pretty key level for this week. And even if, again, if it's a bearish triangle, you still should see some kind of a recovery here in the next week or two, in my opinion. So it's very untradeable. These are very untradeable conditions, because whenever you're looking for potential trades, you want to see impulsive structures to make sure that you are trading in the direction of the current trend. But unfortunately, at this stage, that's not really happening. And as you know, ECB cut the rates, and they may willing to do again new cuts in the upcoming meetings, and this could put even more downside pressure on the euro. And even if you look here, since the ECB cut rates, you can see that obviously yields in Germany were falling much faster compared to the one in the US, and this is also what is driving the euro dollar pair to the downside. So this yield divergence, or not yield divergence, but difference, is something that we should keep an eye. Of course, we want to see that these yields will turn around to make euro dollar bullish. We want to see that yields in the US will fall faster than one in Europe. So of course, if data in the US will trigger this move, then I think that we could have some really nice reversal to the upside still on the euro dollar pair. Now looking at cable, cable again is moving into this some kind of a pullback here. We still haven't seen a break, any kind of a decisive break here above this trendline resistance. We are still testing it. We even fell back into this range. So I think that we are in a new correction, but still it's a correction that sooner or later can take us higher. Also, what I want to look at, or I want to just highlight this on this chart, is that we have in each segment of the trend, we have impulse direction that is pointing higher. So we have here from October 2022, we had an impulsive move. Then market rallied again from September 2023, again a move that can be counted in impulsive sequence. And then if you will look on even smaller time frames, from April of this year, you have another impulse in upward direction. So you have in each segment of this trend, of this chart, you have an impulse that is pointing higher. So I think that that's a pretty significant to show you in which direction maybe market could move when finally it's ready to breaking out. Of course, as an alternate scenario, because not all of the subwaves will be perfect, there is still a chance that maybe that's even a triangle here. Okay, but why I highlight also as a triangle as a one potential idea is because even triangle is a bullish interpretation. In such case, that would be an ABCDE pattern, which I have it here on the bottom. You have an ABCDE pattern, and after wave E pullback, again, you should see a next leg to the upside. So again, you will get the same levels of invalidation of this April 2024 lows. So I think that cable could still see more upside, but for now it's period of consolidation. And also we will get on Wednesday the CPI data from the UK, and also a day later they will announce their latest decision on interest rates. So expectations are for no change regarding rates 5.25%. The CPI, by the way, is expected to come down to 2% from 2.3 in the previous month. So actually their target is also 2%. So if market will come out with in line with expectations, then who knows, maybe Bank of England could surprise and they could cut potential rates. And obviously this could make cable even weaker here in the next few days after the data is out. But keep in mind that whenever data is out, and if they would really cut rates, of course this could be only one and done scenario, and who knows, maybe after initial move to the downside, cable could potentially still stabilize after 3 waves of a pullback. So even if they will cut rates and you will see some movement to the downside at some point, I still think that market will stabilize, because I don't believe that they will cut in each meeting once they start cutting. Okay, they will maybe cut once and they will wait for a while to see how the inflation is playing around with numbers. Also, we have to consider that so far, if you look closely here on the 4-hour time frame, we have already seen some pretty nice move to the downside from last week. That's more than 200 pips. So if we get a little bit lower here, let's say 300 pips or so ahead of the data, then of course, even if they will cut, or if inflation will come out with around expectations, still there can be buy the room or sell the news impact. You will firstly see initial spike to the downside, but then market could stabilize and even turn to the upside. Now in Elliott wave terms, as I said, we are in period of consolidation, and this consolidation took place since we spotted this divergence on the RSI here, with the 5th wave touching the very big trend line resistance on a daily chart that we discussed earlier, and then we also broke this trend line support. So it looks like that we are now in a corrective phase. So ideal support zone would be around 38.2% already been retested, but since that's only one leg from the highs, I just think that there is a bit of room for more weakness. Of course, even flat formation can still be possible here, but that's a bit of tough situation. It's not an easy call regarding flats. Market will most of the time move in 3 waves. So whenever you have a chance, try to label or focus on 3 wave structures, because you will be able to build a trade with much more greater confidence with 3 waves if you will wait on ABC rather than chasing and going long market here on this wave C, because then market will move to the upside. you will see a reversal back lower for wave C. It will stop you out, and then market will bottom after 3 waves. Of course, you can have different entries, different plan. You can always adjust your positions whenever you enter the trade on a specific pattern. But for me, I just think that because we are in this time where we could stay sideways, as discussed earlier, I just think that it's better to wait and see if we get an ABC movement rather than a flat here. Also, if we take a look here on Aussie, so RBI as well, RBI is set to announce the interest rates decision. The inflation in Australia recently decreased, but not as much as they anticipated. There is 3.6%, but of course their target is between 2 and 3%, so still far away. And maybe that will not be that dovish from the RBI, and maybe this could keep Aussie here in this recovery mode. I'm tracking a counter trend movement. Some very nice ABC could be in the making here. Very nice support is at 65.50, around there. So maybe we see another spike lower, maybe even towards 61%, who knows. And then market could stabilize down here. I just still think that when looking at the bigger picture here, that we could be in a very big triangle. So maybe wave D is already finished here. You are now in wave E, meaning that you should see a bounce after this correction. Or wave D still has more upside towards the 61.8% here, but still it should see then more upside again after this pullback that we are tracking. So also if you look here on the whole price action, you have here an expanding triangle, okay? But triangles can never occur in a wave 2 position. So I really think that that's a wave B, and we are in a counter trend movement. So down here, I believe it's a pretty strong, interesting support. Of course, it really depends on China as well. It really will depend on stocks in China, even on some commodities. Copper prices, as you know, have recently reversed to move to the downside. Maybe they're just in consolidation, similar to Aussie. Metals are also, like gold and silver, are also in a pullback. But if this sector will try to stabilize, I still think that Aussie could be quite interesting and attractive on the long side. I definitely have this one on my primary list here. Now looking at dollar yen, as you know, it moved very nicely to the upside. We've been looking at this 158 as a very important magnet zone, okay, and resistance zone at the same time, because that was the level that goes back to end of April when we have seen this FX intervention. Market dropped significantly. Of course, a lot of stops have been placed up there, a lot of new orders been put in place around this level. So it's not really a surprise that market comes back to this level, liquidates some of the positions, and then you see again a new price stabilization or potentially even a reversal back to the downside. So I still think that's a pretty nice and strong level up here, 158. They didn't make any kind of a changes here on their latest policy decision by Bank of Japan, but looks like that they could reduce bond purchasing on the next meeting. So I think that this could be quite interesting to see if maybe Japanese yen could gain some strength here. But higher we go, there will be again more speculations that Japan could intervene in the market. So I really don't believe that there is much of the upside here. But of course, if you just play with the wave count around here, you have a triangle here in the middle. So it can be a triangle that can be finished here, okay, around 155.70. So that goes back to Wednesday of last week. Or maybe wave B has been finished here and you are in a wave C, potentially even forming some kind of a smaller wedge here. You will see another retest maybe of the highs, last week highs, and then a reversal to the downside. But what's the point here is that we are moving out of a triangle. And again, if you look closely here at the whole price action, you can actually see that that was a very sharp move, right? Very strong one. So here we have seen an increase in momentum. But what we are seeing now over the last few weeks or so is that this momentum is decreasing, okay? It's not increasing. But if you think you are in a new bull run that will take us higher, you want to see stronger and stronger price action and sharper moves that will take us higher. But we are seeing the opposite here. That was a strong move, and now we are decreasing. So that quite important guideline when it comes to Elliott wave principle, that bulls are actually losing strength here. They are still in charge, but they are losing strength here, and that we can actually see the opposite reaction when the volume and momentum can actually pick up. So I would not be surprised if that would really happen here on the dollar yen. Now, if we take a look also on silver, since I mentioned metals earlier, so I adjusted the wave count here on silver recently, but we have still some very nice pattern going on. So there's no reason to fight the trend, but it's good to be careful whenever you have a lot of madness going on, when you hear media and everyone saying that silver is going straight to the upside. And this has occurred here back in May, as you know, when silver, I think it was on Friday, it moved significantly to the upside, but then everyone rushed into silver. But then on Monday we have seen a complete reversal, and we are still now in pullback since then. So there must have been a lot of new potential longs that were building up right after that breakout, but now we are seeing this retracement. So this retracement is very nice because there will be now a lot of liquidations who entered the market after this very strong push to the upside. So weak hands would be out of the market, out of this pullback. Now in Elliott wave terms, this pullback is perfect. Looks like a wave 4 here. We retrace already the same length compared to the wave 2 here of the same degree, and also we are trading close to 38.2%. So this area is very interesting, very attractive for potential new bounce here. Also, why I think that this is possible is because if you look here on the smaller time frame, it's the 4 hour, there's actually an overlapping movement, right? And whenever you have this overlapping movement, it means it's not an impulse, okay? And probably it's a correction. Why I think it's a correction? Because again, if you zoom out, the trend is up. That's one thing. And if you can label it as a correction, by the way, this can even be labeled as a WXY in 7 swings. It can be an ABC with an ending diagonal. It doesn't really make any kind of a real difference. Still suggests that this is a correction, because bears are not strong, they're struggling. That's why I see these overlapping moves. It's not directional movement to the downside. So this tells me that this is a correction, it's just a pause. Market has to move in both sides a few times before a lot of traders will give up, maybe even those who are trading short term, and then eventually at some point market will finally break out when everyone will give up within this consolidation. Of course, another interpretation could be that this is a leading diagonal from the highs. Okay, it would not be the perfect one, but okay, I know that markets are not perfect, are not textbook, but still certainly this can be possible. But what's interesting, that even if it's in leading diagonal, and if that really has been some kind of a very significant important top and we'll see much more weakness, what should happen after 5 waves? Well, you should see a 3-wave corrective rally, and then market should continue to the downside. So even with this interpretation, I just assume that there should be some kind of a recovery in the near term. However, I'm looking for potential maybe another push to the downside. 28.40 would be ideal support before market really recovers. But these are very short-term swings. Of course, we are tracking with members these intraday updates as well, and we'll try to figure out if we are really bottoming here or no. By the way, if you're not our member, or if you want these kind of updates on a daily basis, make sure to check our website, wavetraders.com. okay, or if you love this channel, if you love our analysis, make sure to subscribe to our channel, press a like, share this video, make sure to put your notifications on whenever we release new videos so that you will be notified, or webinar, of course. Okay, so that's for silver, and of course I'm watching silver very closely because I just think that if there is really a new turn behind the corner, I think that if we consider that this can be an ending diagonal, that moves can be very, very significant and strong. Where is the invalidation level? Where I would say, okay, I'm wrong. Well, if we started dropping here back below 27, if we see, let's say on a daily, weekly, even better, monthly closes down there, then I just think that I will start considering that we are topping out. And by the way, I still think, I'm not one kind of a guy that will say that silver is going towards 50 or gold will go towards 5,000. I always try to look at the markets going step by step, okay? So here I'm looking for another push to the upside, and then let's the market decide what it wants to do around $34-$35 per barrel, per ounce. But I still think that that's a very important level here up there, that we should not be fooled by potential bullish price action, because keep in mind that we are coming actually out of a triangle. So if we'll see 34, 35, there will be even more traders that will be sucked into this bull run, and that's when actually we as Elliott wave traders, or we who analyze the sentiment through the patterns, will have to be aware of potential new reversal in the markets. Okay, just you don't want to buy something at the highs and calling for some extension significant targets. I just think that it's much better to play a safer game here and always be prepared whenever you see a pullback, rather than trying to play the breakouts, especially in the late trends, in the late stages of the trends. Now, let's take a look on crude oil. So last week, ahead of inflation data, as you know, we've been pulling up this chart. We said that crude oil has been generally bearish through April and May. So obviously this should have some impact on inflation, and I said that most likely, not most likely, but my prediction was that probably inflation will soften a bit. It softened not much, still kind of sticky inflation, but it looks like that obviously this model is still somehow working out pretty well, because you can see that there is a very nice tight correlation. We even have producer price index as well here in blue. So even this one in blue, as you know, it came actually in line with expectations, if I'm not mistaken, last week. But still, we have some kind of a divergence here. Not really, producer pricing is not really that coming that down yet. But if we consider maybe an Elliott wave principle, or maybe just for the start, the basic technical analysis, I just still think that crude oil will eventually come to the downside. Firstly, here I'm looking at the basic technical analysis. What I see is a left shoulder, head, and the right shoulder. Well, maybe some will now say head and shoulders are not continuation patterns, where you should do a little bit more of research and you will actually see that that's not correct. So what I'm looking at is still for potential break to the downside. And this, of course, is not really going to be the case unless we see the break below the neckline here around $70 per barrel. But for now, we are still here in this consolidation, which again makes sense because dollar is also in consolidation. But when we look at the wave count itself here, I'm actually tracking a potential ABCDE triangle. Okay, so that's still a bearish pattern suggesting more weakness, because I also think that back in 2022 in March we have seen an important top, because from there we can count 5 waves down. Even in some commodity indexes I can count the same pattern, 5 waves down, and now we are consolidation period. So after a triangle which is structured by ABCDE legs, you should see more weakness. In such case, wave E obviously can reach all the way to the upper side of this triangle before we may eventually see move to the downside. But in the short term, I just think that this is possible to see even break above $80 per barrel, maybe even towards 82, 83. Why? Because if you look closely on the smaller time frames, you can actually see that here we had a pretty nice reversal to the upside, and we've been looking for limited downside down here, by the way, because I realized that triangle is incomplete. We are coming into some very big, strong support levels. So we rallied pretty nicely, and this looks like an impulse, right? So again, if you know at least the basics of the Elliott wave principle, then you should see this as a reversal. It doesn't really care if you don't know if this is a reversal of a new bullish trend that will take us towards 100, or it's just temporary ABC setback. It's ABC pullback. It's very important to realize that that's an impulse. Okay, so it means that bears are done for now and that bulls are taking place. And you should see at least 3 waves to the upside before you may figure out if maybe market is headed for 100 as an impulse, or maybe it will stop at this resistance and will turn back to the downside. Because in either case, you should see 3 waves to unfold towards the upper side of a very big 12-month range that we are in or so. So after the next potential intraday's weakness here, I would be looking for some support around $77 per barrel down to 75. I think that's a pretty interesting solid support levels for this week, and maybe this will for some represents even some kind of opportunity on the way up. Maybe even some head and shoulder, bottom head and shoulder formation could be forming here as well. But up here, I just think that can be a very important, very strong resistance. And if later this year we're really going to see lower energy prices, okay, this means that inflation could also obviously soften. It means that interest rates could be lowered. It means that US yields will move to the downside, and this and everything can have impact, also bearish impact on the US dollar. Okay, now when it comes to the crude oil, also maybe it's worth to note that this one also have some correlation, not really a perfect one with dollar Mexican peso, but if in the short term there can be more upside maybe on crude oil, I'm curious to see if Mexican peso can maybe erase some of the recent losses. Also, Mexican peso will tend to have a positive correlation with stocks, and stocks, by the way, are still in uptrend. So whenever you have strong stocks and you have crude oil doing well, and at the same time you see dollar Mexican peso moving to the upside, then maybe you should consider that maybe there is strong resistance around the corner. By the way, we also have this 3-wave rise on dollar Mexican peso here at the 38.2% and at the former wave 4. So I think that's a pretty nice strong resistance around 19, and I would not be surprised if this carry trade will sooner or later resume and will take dollar Mexican peso even lower, because I really don't want to say that we are now in a new impulsive bullish sequence if the wave principle itself allows me to label this as a counter trend movement, as a wave 4. But if we start breaking above 1950, then of course I will change my my wave counts here and my prediction. But for now, with higher downtrend still here in play, with our bearish view on the dollar, or just maybe even sideways, I just think that this 3-wave rise is just a very nice example of a correction within downtrend. Now let's take a look on some of the stocks. Firstly, the S&P 500. So as you know, stocks have made a very nice move to the upside. They are bullish, no doubt about that. But again, we are ahead of summer period. We are ahead of elections, and there have been pretty nice move to the upside. So there can be some profit taking going on. If someone would be long stocks significantly, of course, it makes sense to book some, to adjust portfolio ahead of summer, and then maybe adjust again after the summer. So I just think that when it comes to Elliott wave principle itself, you can count potentially 5 waves up here from that March 2023 lows. So we could be moving into some very nice potential resistance here. So 5,500, even 5,600 is a potential resistance. But again, I'm not saying that we are going to see to break down significantly. I'm just telling you that be aware of this pullback. Don't chase the markets up here. I just think that there will be still much better levels. Because whenever we will see this pullback, again, CRUDE will turn significantly bearish, but that's when you should be on the other side. And if you look here on VIX right now, well, we are already at the lower side of this range. Of course, there can be still room for slightly more weakness, but if you try to focus on cycles, right? You just have to keep in mind that this looks like there is no real fear going on. And whenever that's the case, you should be very, very careful if you want to ride this market even higher from here. Also, if you look at nasdaq here as well, we can count potentially 5 waves up into this channel resistance. Again, there can be some pullbacks before market makes even higher, and this pullback would be ideal if we'll see this wave 4 unfold through summer. Okay, and then during the elections period, we see a new push to the upside. Also, maybe till then we get inflation data even soften, and we would have everything what's important maybe to ride to bring this market even higher. But I'm not really sure what's the catalyst that will cause this pullback here in potential in a few months. Okay, maybe it will not happen from here, maybe it will happen from even higher prices. But again, it's better and safer to wait on retracements rather than chasing markets here. Now looking at Dow as well, here's also a consolidation and it's lagging. Obviously it's not really that bullish here, but when looking at the price action, it can continue higher, but again, after the correction is completed. And what I see here is still an ongoing ABCDE pattern. So even if we see a NASDAQ pullback for a wave 4, maybe the S&P 500 does the same, maybe just Dow will just stay in this consolidation here. Also looking at some of the stocks, nvidia is still doing very, very well. But if you look closely here, you are in fifth wave up here. We don't know how far fifth wave can extend. It's a very strong, unbelievable strong bull run. But if you start seeing a reversal and at some point market moves with an impulse back to the area of a previous wave 4, well, that will be your confirmation that market is stopping out, even if just temporary. So again, chasing up here, very, very tricky, especially if you want to hold maybe, or looking, it really depends what kind of a trader investors you are. If you're more like a short term, doesn't really care where market will go on the longer term. If you're looking to hold maybe from 1 to 2-3 months, well, then I just still think that it's better to wait on some different opportunities. But here, if you look maybe on AMD stock, where it is, you can see that not here, that this one is maybe quite interesting for this week. Notice that here on the 4-hour time frame, I can actually count 5 waves up from May lows. Okay, and then you have this counter trend movement going on. Already have some overlapping price action. You have also gap here from May 15. I'm not really sure what's been back there, but I think that that's a pretty interesting support here. So maybe some of the stocks are doing still could offer still some very good opportunities here, and maybe there is another leg to the upside here. It can be another leg that is missing here. Also, if you look at Tesla as well, we already retested some news. We made some new swing low last week, but then just rallied and not really breaking out yet. So I'm just wondering if maybe something more complex is still and deeper is still in the cards here. But overall, what's really important is that was a very strong move here, clear in impulse. So in the short term, I just think that not the right arrows. I just think that even more upside here can be seen after this retracement. Also here, semiconductor, this ETF still very, very strong. But again, you are potentially here in a 5th wave. So again, can be very, very late stages of this recovery. So again, after a pullback, you can expect more upside, and the pullback should not be a surprise. Okay. Now, finally, any chance to also show other metals like palladium, platinum? I will try to do my best and maybe cover it on the next session. Okay, so I can prepare some of the charts. Euro pound, I think that we covered euro pound last time. It didn't change much, I believe, but maybe I will throw out some updates on Twitter. So make sure to watch me on Twitter, because certainly euro pound could be very interesting, because we have Bank of England and UK CPI this week. Now, finally, let's take a look on cryptocurrencies. So cryptocurrencies are slow here, are sideways. Still, I believe that they are in consolidation. And if you look here, we are tracking a corrective movement on the crypto total market cap. Okay, so that was a 5 waves up from May lows, and now we are in a very deep correction. So maybe still some room for 2.2 trillion, but overall I just think that maybe there can be some stabilization down here, and this could, if that would be the case, this could give you some opportunities on cryptocurrencies. Looking at Bitcoin, what really happened and what is important and what we've been warning in our past updates and even a webinar here, we said that this overlap with 65,500 could really trigger more complex correction, and this is actually appears like that's happening. Okay, and what is now important? Well, it's always when this happens, you should make a step back and see where we are. Okay, and maybe before we go to some of the subwaves here, just still, I can maybe give you a reminder that again, we are in summer. So here, ahead of summer. So here in yellow boxes, what you can actually see, this represents the consolidation during summer period. Okay, and if you look closely, we haven't, here was back in 2018, we've been sideways. 2019, we've been sideways. Then that was in 2020. Firstly, some at the start of the summer, some moved to the upside, but not really a progress. Then till September, we moved back into this range. So it actually, the whole period was just kind of a sideways. The real mover, the only mover was here in 2021. Here again, in 2022, it was a sideways. Then September, October, we started to breaking out of this range. This was to the downside. Then again, here was 2023. Firstly, slight move to the upside in June, not really breaking out. We fell back into the range through the rest of the summer, and then we have to wait on the breakouts till October and September when we finally move to the upside. So I'm just wondering if maybe we just consider the personality of this Bitcoin here and ranges, if maybe we are still in the very similar period. I would not be surprised, because in Elliott wave terms, if we are going now back to this Elliott wave chart, if we are really in an ABCDE triangle, well, this triangle is incomplete. So still we are missing a few legs. Wave C, wave D, wave E. Even flat is possible, because whenever you are in the middle of a complex correction, don't try to stick with just one wave count, because you never know what will be the outcome. Okay, the simple correction to track is always a zigzag, because you have clear first 5 waves down in wave A, 3 waves move back, and then you should see another weakness. So that's a pretty simple approach to track. But whenever you have a deal with 3 wave structures in each directions, firstly to the downside, then to the upside, then situation is different. So it's very important to keep an eye on different potential outcomes and even correlated markets that will help you to navigate the Elliott wave principle on this asset. So here our primary idea, however, is an ABCDE triangle. We still think that this could offer some very interesting opportunities on the way up, but as we said, firstly, maybe we just have to be patient here and wait on the market to form these needed subwaves. The first support that we are seeing for wave C could be here in this previous range, but if we really try to use maybe these FIB tools, then you can actually see that the 61.8%, which is the most important, and this is what we should look for, the 61.8% of wave A, because that's the leg that moved in the same direction as current wave C. So that's the potential support around 61,000, 62,000. This is what I would be looking at on the next very big dip. Okay, so that's the first support that should then hold this area down here. That's the first one, around 63 to 64. Now let's take a look also on the Ethereum. So Ethereum, Still, we presented you two wave counts last time. Still, both are valid, but I somehow, my personal view is that maybe this one is better to track. Why? Because it will allow you to manage potential long opportunity, long idea here much better, because invalidation levels are much lower here. So we can still count 5 waves up from that April lows, and you're now in a counter trend movement. Even this price action here looks like it's chopping around. So I just really would not be surprised if we see a bit of more weakness. The 61.8% in such case is very important level, support level $3,200. Also, I shared this chart as well, I think it was last week on Twitter. So we have seen Ethereum outflows that hit highest levels in months of this year. So what this tells you, there are a lot of traders, speculators that made transactions on exchanges and then they transferred their Ethereum to private wallets. So why they would do that? Well, because they just think that Ethereum is headed much higher because of this ETF launch. Well, but market doesn't always function like that. It's just not that easy that everyone will just keep Ethereum and now this Ethereum will move straight to the upside from current price. So what market has to do, unfortunately, that's how it works, is that a lot of liquidations will usually happen before market may finally break to the upside. So this data actually tells me that it was a bit overcrowded reaction, that everyone anticipated that Ethereum will see much more of the gains. Of course, I'm also expecting that there will be much more of the upside, but not from here, not from that level. And actually, since this happened, Ethereum is now still in this consolidation, and I just think that maybe even lower prices will cause more liquidations, weak hands will be removed from the market, and that's when it will be much easier to find the support, because then even more traders will maybe even try to turn bearish. They will realize, okay, Ethereum is maybe not even headed higher, and that's when we should be looking to the other side of this coin. Okay, so I hope this makes sense. Traders, I hope this webinar was useful. Please press a like, leave us a comment below this video if you're watching this recording. Share this maybe with your friends, with followers, whoever you want, and make sure to be with us next time as well, each Monday. And also, if you're interested in our analysis, make sure to check our website, wavetraders.com. You can register, apply for a trial, and you can see what's going on inside of our members area. Okay, traders, good luck this week and talk to you soon. Bye.